Is this the top for stocks? We will see the downside targets for S&P 500 as today's action is quite bearish. Homebuilders are also spelling out trouble as they enter an official bear market of their own. We will look at the Canadian dollar and yen as well as the dollar currency index, as pullback for gold could be imminent in the very near term. And we will finish up with Solana, as it could be leading Bitcoin lower. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, February 21st, 2025. As always, hit the like button, subscribe to this channel, make a comment, share this video, or ask me any questions you like. If you're a subscriber, stay tuned. We will be covering lots of various securities, namely market breadth, and there are still too many bulls, and usually that means we might get the corrective action. Also, we'll be covering various things that are not covered in a general video, such as crude oil, as well as ETFs, large cap ETFs, treasury bonds, various bond ETFs are picking up again, foreign ETFs, large cap stocks, some of the speculative securities, as well as gold related. So do stay tuned. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market indicators, for which you can sign up on my site, and the link is in the description. So we're currently looking at the S&P 500, and today's action was quite nasty. I mean, it's not as nasty as some of the, like for example, this one right there from December 18th, but nevertheless, it's a pretty broad sell-off today. And I mean, we did hit all-time highs. These are record highs on just a few days ago on February 19th. Now suddenly we're seeing strong selling. The Wall Street Journal is saying that that's because UnitedHealth Group is being investigated by Doge, the new boogeyman in town. However, the selling was quite broad, so I'm not sure I can just blame the Elon Musk on this. However, I don't know, you guys make a comment. Do you think there's going to be a Tesla boycott? I'm wondering about it myself. But besides the point, I don't want to get in too much into politics. We'll be looking at technical picture mostly. For now, S&P 500 remains in, obviously in an uptrend. We want to be looking for an opportunity to buy still, but we need to buy on a pullback. I don't want to be buying up here next to the record. So first obvious target is, of course, this green support resistance line. Again, those are my indicators, this green, blue, red, and yellow lines. You can find out more about them by going to my site. So the first target is basically there. We're looking at just a few, not even a percent probably, 1% away from, excuse me, I am realizing I forgot to add the yen and the Canadian dollar. All right. So first target for S&P 500 is about a percent away. The green line. Currently we're at 6,013, and the green line is at 5,947. So this is like a first support, and it's a weak support. And I mean, sometimes it's held, as in, for example, back here in December, early January, we set several retests of this green support resistance line, and it held. This time, it kind of feels a little different, and selling is quite broad. Additionally, we have, if you're a subscriber, we'll be talking about measure of market breadth called put-to-call ratio, CPC, and that one is flashing warning to the tune of we have just too many people who think the market will go to the moon, too many bulls. When there are too many bulls, then usually we see a market corrective action. So I think we're seeing a beginning of that correction. And notice this blue support resistance line, and if I zoom out, you can see that it hasn't been touched in a very long time. In fact, it hasn't been touched since November 2023. So that is close to a year and a half now. And usually that's where I want to be looking to buy. So a blue support resistance, or the blue support resistance line, is about 5% away from today's price levels. It's not a lot, and I think that when we reach that, we will need to make a decision of whether the market has indeed bottomed. So let's kind of look at what that bottom might look like. So going back here to July of 2023, this was the last all-time high. We see a pullback that went from July all the way into late October. We dropped below the blue line, but eventually rallied above it and closed above it. So right there where I'm hovering on the 2nd of November, this is where we see a close above the blue support resistance line. This is basically our opportunity to buy. Why? Because this is a lower risk entry. And you can see that the corrective action, I mean, it went quite a bit down, but it didn't touch the red line. So usually this way I look at this is that I want to see a low below the blue line, or at least or a move below the blue support resistance line, and then a close above it. And that's the trigger. We just buy it on that trigger. Last time this trigger clearly worked, in spades. Stock market went from 4,200 to over 6,000. Yeah, and I was actually predicting that a while back as well. Saying the breakout. Let me show it to you actually on the longer term time frame. So this is what I was saying back in 2023. So I'm going to draw out this pattern. So we got move up, move down, kind of another move down, and then a move up. So this is a classic sort of cup and handle pattern. This is a cup and this is a handle. So when a cup and handle patterns arise, we want to estimate how far the move will take us. And to do that, we need to measure the depth of the pattern. So the depth of this pattern at the time was around 1,200 points. And I pointed out that we should duplicate this on the upside. We just don't know the time frame of when that's going to happen. Indeed, that happened. So, we moved exactly where I was predicting. Now, is this it? It's possible. Yeah, we're definitely strongly overextended to the upside. I don't know if this is exactly the top. Maybe we'll kind of come down towards the green line, try to make another high, and then fail and continue lower. The point of the matter is the pullback would be a normal, healthy kind of part of the stock market action. So we'll see if this is going to happen or not. But yes, indeed, this was predicted. In fact, I nailed the prediction exactly. We did go to 6,000. People were saying, yeah, that's kind of crazy. Now we did go to 6,000 for S&P 500, but at this point, there is a good chance we will be correcting at least 5%, possibly more. I don't know if this is indeed the top. Also notice one more feature of this graph is that the depth or the distance between the yellow and the green lines, back, for example, here in September of 2024 was around 1,000 points. Now this same distance between the yellow and the green lines is only 789 points. So I call this narrowing of the trading range. So we have less distance for the price to travel to get to bearish levels. And where are the bearish levels? Bearish levels also mean that we will be no longer contemplating buying or long trades. We will be contemplating selling or short trades. In fact, let me show it to you what the bear market looks like, looked like rather in 2008, 2009. Yes, I'm going above and beyond today's announced program. Okay, so here we go. This is a illustration of what the bear market looks like. This is the housing crisis of 2008-2009. Bear market, again, I'm not making it up, I'm just using my indicators here. So very easy to see, bear market began where I'm hovering right there on January 8th, 2008. And then we started making lower lows and lower highs. And so what we want to do is we want to short the highs. Okay, so we made a lower low here in January 2008, kind of bounced towards the red line. We want to sell it short there. Same thing, sell it short there. So bounce, sell short, bounce. And I mean, the last trade would have been insanely profitable. The trade would have been entered here on the 6th of June 2008, and then stock market famously collapsed to 666 in March of. It reached the number 666 in March 9 of 2009. So that would have been a over 50% drop. Am I predicting something similar right now? No way to tell. Before we get to a bear market, we need to get to the bear market. And bear market levels, again, are at about 5,000 currently. So around 14% from today's price levels. Will we get there? Nobody knows. But definitely we are overextended. The target for the previous giant cup and handle pattern has been completed, so we are anticipating at least a pullback of some sort. Troubling development for me was the fact that Homebuilders all of a sudden entered the bear market. And this is, I was just showing you what the bear market looks like, and this is what it looks like. So we have now entered a bear market for Homebuilders. Okay, new downtrend or bear market. So if you want to, or rather, if you think that we are done with going up, then selling Homebuilders short would make sense. But do you want to sell it right now? I wouldn't. I want to wait until we get like a pullback towards at least this red line and then sell it short. Also notice on this chart, it's quite telling the way the price action occurred. So notice that, after hitting highs, we had a very long, big drop, and we burst through this blue support resistance line. Okay, continued down to the red line, bounced, and again we got rejected. You see, there's the rejection right there. At the blue line. So the fact that this is happening and then it continued lower and then we see another rejection, I'm going to show it to you right there. So we have another rejection right there at the red line now. So these are all negatives, in general for a particular stock, in this case Homebuilders ETF XHB. Homebuilders is not a big part of the market, but it is indeed a part of the market, and perhaps this is like the first thing that's happening, first canary, I guess is the word. All right, let's switch gears. We're currently looking at dollar currency index. So dollar currency index was recently in an uptrend, and it's still technically in an uptrend. 2-year highs were hit just recently in January of this year. Another attempt to go higher was stopped on the 3rd of February, and when I get to the Canadian dollar, I'll show you where the spike came from. And then looks like we continued lower. Now, as right this instant, we're actually getting a signal to buy the dollar. So I'm thinking we will bounce. I'm thinking the dollar will bounce, but we don't know exactly to which level it will bounce. So it may or may not continue all the way to new highs. If indeed we have tapped, and it does seem like there's a good chance that the dollar has stopped, because we see in a lot of this rejection type of candles. Looks like you see those shadows out of the top. This where I'm hovering right now. Same here. Those are the rejections. So in other words, the prices tried to come up higher, but the bears, the people, the investors who think that stock market, or in this case dollar, will continue lower, has pushed the prices lower. So technically speaking, right this instant we have a buy signal for the dollar. If indeed what's happening is correct, the dollar will very likely bounce in the near term. And as I was about to get to gold, so I'm about to get to gold. Then gold most likely will come under pressure, and gold is insanely overextended to the upside. So a stronger dollar would most likely imply weaker gold, at least in the near term. So let's look at some of the components of the dollar currency index, and one of them, it's very interesting pattern, I thought. This is a Canadian dollar futures. So Canadian dollar futures completely collapsed as the elections neared, and then President Trump was elected, inaugurated, and started talking, and then he was about to impose the tariffs on Mexico and Canada, but on February 3rd, President Donald Trump said he agreed to immediately pause tariffs on Mexico and Canada after speaking with those countries' leaders, well, that day, February 3rd. So notice what happened. We had Canadian dollar touched 21-year low. This is a 21-year low. This prices has never been this low. So I mean, if you travel to Canada, this would be just a wonderful opportunity. And now we kind of bounced higher. So right this instant, technically speaking, Canadian dollar is still in a downtrend, and I would be selling it short. However, I'm not exactly comfortable selling it short after such a huge move to the downside. So I'm not 100% that we have bottomed, or that we have topped here for the dollar. So I want to wait and see, because I have a feeling we're going to see more upside for Canadian dollar. And if we get slightly higher, and this blue support resistance line is at 0.72, so 72 Canadian cents to a dollar. I'm sorry, the other way around, 72 American cents to a Canadian dollar. If we get to that level, then it will be actually the opposite. Canadian dollar will be ascendant. So let's wait and see. It's very tight trading range here. We'll see where it goes. But to show again this spike, this is a February 3rd spike. So February 3rd price for the dollar currency index went pretty high up here. And one of the reasons why it didn't go, way higher and why it was stopped there is because the Canadian dollar stopped falling. Basically, there was just no way it will go even lower from here. So we'll be watching Canadian dollar as well as of course euro and British pound quite closely. But next I wanted to cover the Japanese yen. Let me see if I can find the futures. All right, so the futures is probably easier. So relatively similar picture for the Japanese yen. We see, a multi-year. Well, actually, this is a 52-week low, but the previous low was back in 2024, in July of 2024, which is a multi-decade low for the yen. So I'm not sure we're gonna go that low. I think this is probably as low as it's gonna go. And notice right now what's happening. Yen is rallying, so yen is gaining versus other currencies. In this case, the dollar. And this is what I was referring to. So technically speaking, if I was trading yen, I would have shorted it right there on the 10th of February, and I probably would have made a little bit of money, and maybe I would be stopped out at no loss at this point. But notice what happened afterwards. We broke about resistance at the red line and continued higher. In fact, this is the highest close since October of last year. So we're again approaching very rapidly a bullish levels for Japanese yen, which is not that far. It's only 2% away, 260 pips. So again, if the Japanese yen breaks above that level, then it will be in an uptrend, and the dollar will be under pressure. Finally, I wanted to show, finally for this currency issues, I wanted to show the gold. Gold is traded in US dollar, so it's gold divided by US dollar. And as I just showed, a dollar might bounce, for a few days to a few weeks possibly, which should, in theory, put pressure on gold. Okay, and it's definitely overextended. I mean, we had a humongous run, truly. The last alerts were back in February of last year, over a year ago. And excuse me. And if we count from previous alert, gold has gained over 45%. So if you were able to open using my indicators, and notice how easy it is to trade such securities. Yeah, you can see you don't have to be a rocket scientist. You just look at the chart and find an entry point around the blue line, and sometimes it goes 40% higher. So gold could be under pressure in the next few days to weeks. We'll be watching it very closely. It's super overextended to the upside. I mean, demand is high and all that, but yeah, we're super extended. So we need to be cognizant of the fact that we could be correcting, gold could be correcting soon. And finally, for today's presentation, I wanted to show cryptocurrencies. This is Solana. Now, until recently, I never heard about Solana, but somebody for some reason wants it and people use it. I think it's a competitor to Ethereum. Fine, I don't really care. Important thing is Solana has, technically speaking, entered the bear market. So downtrend for Solana began on 17th of February of this year, just a few days ago, where I'm hovering. How do I know? It closed below this red support resistance line. We had another opportunity, or rather, there was another attempt to get above it, but again, it was rejected right there. It was just yesterday, or rather today, technically on Friday. This is 24-hour security, 7 days a week. This is technically speaking already Saturday, 22nd of February. So we're seeing potentially a reversal for Solana into a bear market. Now, it's still possible that it will continue, reverse again and continue higher. No way to tell, but it does look like Solana has indeed turned around, and as a result, I think Bitcoin, or not as a result, but as a possibility that Solana could be leading other cryptos lower, and of course Bitcoin is the biggest name out there. So I wanted to point out this price action of late. So from 4th of February until today, basically, notice that it tried on multiple occasions to get above this green support resistance line, but was still rejected there. Today was a big rejection and they move lower. So right now we're seeing like a feeble attempt to go higher. We'll see what happens over the weekend. Bitcoin obviously is traded 24 hours. Next level to watch is the low from 3rd of February, but I think if that's not a very strong support. I think the stronger support would be around the blue support resistance line at 86,700. So we'll be watching that very closely. All right, if you're not yet a subscriber, head over to MasterChartsTrading.com. Click on sign up for one of the products. So again, I have trading indicators, these lines in the chart. You can trade pretty much anything under the sun on most time frames. So for example, you can trade on 5-minute charts. This is Bitcoin on 5-minute charts. So for example, you could have traded it by selling it right there. That would have been a very successful trade. So these are the indicators. They're available for TradingView.com. TradingView.com is a free interface. You need to open a free TradingView account. Once you open a free TradingView account, come back to Master Charts Trading and sign up for my indicators. Newsletters, I send out daily alerts about various securities that we trade, as well as weekly members-only videos. So for example, this week we'll be covering lots of various securities. Market breadth will be covered in members-only video, as well as the various securities such as ETFs, bonds, emerging and foreign markets, large cap stocks, speculative securities, and gold related. That is also available for you as a newsletter. Of course, the best deal is to get both trading indicators and newsletters. Currently, it's at $49.95 per month, equivalent if you buy a year's worth of subscription. If you buy a monthly subscription, it's at $59.95 per month. Every single plan has a free 7-day trial. You can pay by credit cards, GPay, Apple Pay, as well as PayPal. Let me know if you have any questions. Make a comment, like this video, share this video so more people can see it. Again, thank you for watching and have another great trading week. Bye-bye.